The government of Kenya, through the Central Bank of Kenya, has declared the February 2025 Treasury bonds deals, and it's a bit exciting that they are infrastructure bonds, and this means that the interest that you get to gain is not subject to withholding tax. The government will take nothing out of the interest that you get. So I want us to take the next few minutes and see what we need to know about the bonds. And in this particular video, we are talking about the second bond, that is IFB1 stroke 2023 stroke 17. And from the title, we can tell that this bond was initially issued in 2023 and had a tenure of 17 years, but we're in 2025. Of course, some time has elapsed. So the time to maturity now, as we speak, so the time to maturity is currently at 15.1 years. That is important to note. The other thing that is vital to note is the coupon rate. This is what it determines what we get in return. So coupon rate is standing at 14.3990%, which is quite a good rate given the current rates that we are experiencing for the government securities, which are clearly indicated by the Treasury bills that are currently standing at between 9% to 11%. So 14% is not a bad deal on matters government securities. We also have the period of sale. This is the period for which you can place a bid, and it is started on the 23rd of January 2025, and it will go all the way to the 12th of February 2025. So that is the period of sale. Between those two dates, you can be able to place your bid on the Dow CSD app. The settlement date, this is the day by which, if your bid is successful, you ought to have sent your money to the Central Bank of Kenya, and it is on the 17th of February 2025. So by 17th of February 2025, 2 p.m., you ought to have transferred your money to the Central Bank of Kenya. We also talk about the price. This is a reopening, and remember when we were discussing reopened bonds, I explained everything about the clean price, the dirty price, and all that we need to know when it comes to reopened bonds. And for this particular bond, it sounds to be quite expensive because the price, that is the dirty price, is at this bond attracts a high accrued interest of 6.3688. So then the clean price is determined by the yield. So suppose the yield is at around 14%, the clean price will be at 102.1602, and this gives the dirty price of the bond to be around 108.5290. So this, what it means is that if you get to invest 100,000, if you want to invest 100,000 in this bond, initially you will not pay 100,000. You will have to pay around 108,529 Kenya shillings, but your principal amount will remain to be 100,000. So it is selling at a premium, and it's quite a high price. So the other thing that we need to talk about is the minimum amount that you can invest in this bond, and the minimum amount remains at 50,000. So if you have your 50,000 and you have been thinking about investing in government bonds, you have a chance in this bond. The minimum amount is still set at 50,000. The other thing that we need to talk about is coupon payment. So coupon payment, and this bond pays coupons in the month of March and September. So those are the 2 months when you expect the coupon payment for the bond. And at that point, we can try and do an example and see what returns that you get to gain. For example, if you decide to invest, an example of someone who decides to invest 100,000, we have said the coupon rate starts at 14.399%. So multiply that by 100,000. That comes to 14,399. This means that per year you are entitled to this interest, but you said that interest from bonds is paid in 2 equal installments per year, so it is 14,399. We divide by 2. Remember, it is an infrastructure bond, so this interest is not subject to withholding tax. So this gives us 7199.5. So in the month of March, you receive 7199.5, and in the month of September, you receive another 7199.5. So that is the return that you start to gain from this particular bond. The other thing that we need to talk about is the redemption structure. And redemption structure is what determines when you get back your principal amount. And for this particular bond, on the 28th of February 2033, so 28th of February 2033, 50% will be paid. 50% of the principal amount will be paid. And on the 20th of February 2040, the 100% will be paid. But remember, when we were interpreting the features of the bonds, we said that what it means is that if you invest less than 1 million shillings on the first redemption date, that is 28th of February 2033, you will not get a 50% of your amount, but rather you will get back 100% of your amount. And this means that for you, this bond is not for 15 years because you get your principal back in 2033. So for you, it will last for around 8 years or so. Those who will get to invest more than 1 million, they will get a 50% of their money on this date and get the remaining amount on this other date. So this is all you need to know about the IFB1 stroke 2023 stroke 17 that is currently floated, and it's easy to invest in treasury bonds. You don't need to know anyone in the government. All you need to have is open a CSD account with the Central Bank of Kenya using the DAO CSD app or the DAO CSD portal, and just follow some easy steps. So in case you have a question or a clarification that you'll try to make around this particular bond, feel free to inquire. Otherwise, see you next time.